Hello guys, good morning. Welcome to our live trading session for today. All right, so as usual, we'll be analyzing the market together, and when we get a good entry opportunity, we're going to take advantage of the opportunity and open position. All right, so let's not waste time. Okay, so I'm currently analyzing this market. This is GBP USD. This is the 30-minute time frame. Let's switch to 1 hour. So on the 1 hour time frame, you can see that the market has been on the bearish move. Okay, so the market has been bearish, and we have levels where the market had previously rejected. Right, so we have this zone where the market had previously rejected. Okay, where the market was previously rejected. Then we have this level, you see, and every time the market, gets rejected and trade to the downside, there's another or there's a new leg of lower low created. Okay, so what I mean by new bearish leg, new low created is this. So if you look closely, you'd notice something. Okay, so if you look at this closely, you'd notice that every time the market okay, yes, so it's a breakup structure. So every time the market, make another move, another low, a new leg is created. Okay, a new low is created. So we have a breakup structure here, and then we have a new low. All right, and then the market came to this level. All right, so we can consider this as a low, right? Because for a market to have a valid low, a valid high need to be created. All right, and as you can see here, the market actually gave a low. All right, there was a bullish move that created a lower leg in the market. But you see, after this low, we expect the market to actually, make a move. So this is a low, this is a high. All right, this is a high right here. This is a low. Okay, so this is another high. All right, this is another high, and as you can see, the high didn't go above this high. Okay, so this is another high. This cannot be considered a low because didn't get the market didn't go high. All right, that one. So we're going to use this. Okay, so a high was created, and then after the high, you see another move, another leg broke structure and gave us another low. Okay, another leg gave us a new low. All right, so we have this low, we have this high. This is it. We have a high, we have a low, we have a high here, we have another low here, another high, and another low. So this is called a lower low trend. Okay, so this simply means that the market is in a bearish move. All right, a strong bearish market trend. All right. So now the next thing to look out for here is your level of rejections, your level of entry. Okay, you want to see level where the market had previously rejected, and those are areas where you want to pick your entry. All right, so you want to look at levels where the market had previously rejected. These are levels where you want to open your position. All right, so we have a low, as I've said earlier, and then we have this correctional phase. Okay, so we call this a correctional movement. Okay, we call this a correctional movement. So what this correction movement mean is, it simply means that you see we have a huge gap, okay, and huge gap in the market are caused by imbalance, okay. So imbalance are move created by um, you know a volatility, okay. So when the market is very volatile and maybe there's a news event and then the market just spiked. So those spike causes imbalance in the market, all right, leaving a huge gap. So for the market to align itself back to the structure, the market need to do what we call a movement to close the gap. Okay, and that is exactly what is happening here right now. Okay, so this is a correction. Okay, it is called the correctional movement. So right now the market is trying to correct the huge gap here, and that is why you see all this rough movement. Okay, so what we want to do right now is to take advantage of the correction. Now the correction is going to is looking for level where it's going to get enough liquidity, take out liquidity, and then reject that level. So we have this first area because for scalpers will definitely be on the lower time frame. Let's say on 15 minutes time frame, looking maybe on the 5 minutes time frame, looking for levels like this where the market would get to, and then they will take a sharp entry, right? But little would they know that the market also has its own plan. Okay, the market will also have its own plan. That is why if you are an SMC trader, I always say this: the most important thing is lack of patience. Okay, you lose to the market if you are not patient enough. If you are in a rush to get an entry, you always lose to the market. All right. So if you want to win the market, you need to learn how to be patient. Okay, you need to learn how to be patient. All right. So now, what you want to do here is, um, as I've said earlier, on the lower time frame, the retailers, the scalpers who want to take entry from this level. Okay. So and this level is going to be induced. Okay, that's what we call inducement in the market. All right. So inducement is similar to uh, liquidity. Okay. So when the market takes out liquidity purge. All right. So uh, so liquidity purge and inducement are kind of similar. All right. The only difference is for an inducement, you have a level. Okay. You have a level where you want the market to actually get to. But you are saying that the market is going to induce the retailers, go against them before actually going down. Why liquidity is, liquidity happens even before the level is created. Okay. So, for example, we have a liquidity here, right? We have a liquidity right here. We have a liquidity right here. So this is the difference between liquidity and an IDM inducement. Okay, so here you see we have liquidity, we have a change of character before we can start looking for entry opportunities, before we can even talk about other blocks or fair value gaps. Okay, why inducement is a move that is created when the market already have all of this, and then the next thing you are looking for is, all right, where is the market going to, induce? All right. So if there's a zone where you think the market would induce traders, the better your chance of getting that entry. Okay, so now that I know that we have an inducement level here and the market is going to induce traders, I want to stay here. I want the market to go above this level, come to this area before selling to the downside. All right. So now let's go to the 15 minutes time frame. We've already had our entry on the 15 minutes time frame. I think I've already given this trade to the premium members. Yes, yes, yes. I've already given this trade. It's a pending order. All right. So we set limit around this level. All right. This is our first take profit, and our second take profit is around 2.5. I think around this level. Yes. So this is our second take profit level. This is our first take profit level. All right. So that's the analysis for GBP USD. Okay. That's the analysis for GBP USD. Now let's move on. All right. So as I've said earlier, we have our sell limit, and we're just waiting for the market to get to this zone, trigger our sell entry. We have our take profit and our stop loss on also. All right. So let's move on to another pair. Okay. So I have this analysis since yesterday evening, and unfortunately, I didn't know when the market. I didn't have a sell limit, sorry, a buy limit order set. Okay, I didn't set a buy limit order, but the market came down. See, I think I got the end. I said this when the market was around here. So this is about those in a few hours, and the market is already playing out. Okay, the market has already started playing out. Okay, So let's just look for the one that will give us, an entry. All right, so we are currently on Euro GBP. So this is Euro GBP 1 hour time frame. Right, let's go to a higher time frame. Let's use 4 hour time frame. All right, so Euro GBP, you see, so I have my analysis, and the market kind of look like when it gets to this point, there's going to be a move to the downside. Okay, so let's go back to the higher time frame. Let's go back to the 4 hour time frame. So on the 4 hour time frame, on the 4 hour time frame, we have this long, huge spike, okay, that took the market to the downside. So what I'm expecting the market to do here is a correctional phase to this level. And once the correctional phase is over, I expect the market to sell down. All right. I expect the market to sell down to at least this level. Let me just use a round figure. All right. So I expect to sell from here to the downside. Right. So even though this market is an uptrend, remember I always say this, even though the market is an uptrend, doesn't mean that the market, will stay uptrend up all through. There's going to be bearish moves along the, movement along the line. There'll be bearish move. The market will keep going up and down, right? So that's exactly what's going to happen here on Euro GBP. Okay. Okay. All right. So that's the analysis for Euro GBP. All right. So as you can see, we have our take profit, we have our stop loss, and then we have our entry point. Okay. So we just need the market, to get to this level before we open our position. Okay. So I'm going to keep an eye on this market, and once the market is, rejecting this level, then we can go ahead and open a sell position. All right. So for Euro JPY, yes, Euro JPY, let's go to 4 hour time frame. Okay, let's analyze the market from the higher time frame. So we are currently on 4 hour time frame, and think this can take our trend line. All right, we have a trend line. We have another trend line below. And then we have this huge fair value gap. All right, for Euro GY, the market bullish, market bearish. So this is July 11th. All right, so you see the market has been bearish since July 11th after this long spike, happened in the market. So after the long spike, the market continued to trend bearish. All right, and then until it got to this point where we have this bearish leg. Okay, so until it got to this point where we have this long bearish leg. All right, so we have this low. The next thing now is the market need to create a high. All right, so this is exactly what I've been explaining right from the beginning. I said anytime we have a low, the market will definitely, want to create a high in order to have another low. All right, and that is how the market is. That is how the market will continue until there's a change of direction. All right, until there's a reversal in the market. So right now, what we expect here is we expect the market. Okay, so I expect the market to come into this level. All right, I expect it to go inside this box, which is our support level. Okay, so I'm expecting a rejection from the level, and then I expect the market to trade downwards. Okay, so this is the 2-hour time frame. Let's go to the 1-hour time frame. Or let's go to the 30 minutes time frame. Okay, and this whole area will be used as inducement level. Right? This whole area will be used as an inducement level. So we have this inducement. We have an inducement level here. So this is an inducement. All right, so we have the inducement level, and now I expect the market to actually get to this level and then sell downwards. Okay. All right, so we have analysis on GBP USD, and then we have analysis on Euro JPY. Okay, so whichever one triggers first before the end of our session, we take advantage, of whichever one triggers. All right, so let's continue to make more analysis before the end of our session. Um, so let's make analysis on USD That's our next point of interest. USD. So we have analysis on USDCAD, right? And the market looks as if it's going to continue to buy. Okay, this market looks like it will continue to buy. The market is currently on a resistance zone, right? This is the 4 hour time frame. Now let's switch back to the 1 hour time frame. So on the 1 hour time frame, you see this is the level. We have a double top, but the market went above the double top. And the double top is a reaction of the level we have on the 4 hour time frame. Okay, but the market broke the level and went above the level. So what we are going to do now is, since we already know that the market has a higher chance of breaking highs and moving moving up further, I would suggest we stick to bullish moves. Okay, so when you are making analysis, make sure you are analyzing a buy. Okay, you are analyzing for buy, not sell. All right. So we have a break of structure. So this is an inducement, and the market. This is a liquidity level, but the market took out the liquidity. Okay, the market took out the liquidity and so and bought. Okay, and then we have a new level. This is the 1 hour time frame. We have a new level now, but I think we should wait and allow to see if the market would close above or below. Though we already had a bearish candle, okay, that closed below the previous bullish candle, right? And the candle formation, after the closure of the bearish candle, it actually formed what we call a candle pattern. Okay, so the candle pattern there is a bearish engulfing candle. Right, we have a bearish engulfing candle, and we expect the market, you know, so bearish engulfing candles are this is supposed to be a breakout and a retest. Okay, so if we go to the lower time frame now, you will understand what I'm trying to say here better. So on the lower time frame, sorry, let's go back to 30 minutes time frame. So you see the market has been trading. Okay, the market has been trading on this level. Okay, on our trend line channels. So every time the market touches the trend line channel, the market will always buy. So you see, we have a touch. We have several touches. So this is where the market first touched, where it first touched the trend line and then sold to the downside. Okay, so we have another touch and another touch here. In the market, every time the market hits it, the market will go the opposite direction. And then we also have a touch on the lower side, and you can see how the market bought after touching that level. We also have another lower touch, and then the market went up. So the market went on the same way until it got to this level where we have a double top, and the double top is a strong rejection in the market. So instead of the market to reject and sell, the market actually sold. Though the market sold until this level, and then it continued to go up, breaking the high. Okay, breaking the double top. So now that the market has continued to go up, double top is supposed to, hold a trade to the downside. Double top is supposed to give you a sell opportunity. But now that a double top has, gotten broke above, it simply means that the market will continue to go up. The market will continue to buy. Or this can just be a liquidity level. But before we can actually use this as a liquidity level, uh, the market needs to go below this. Okay, the market needs to go below this level. This, all right. But for retail traders, what the retail traders are going to say is that the market broke. Okay, the market went out, broke below our trend line, and then their entry is going to be right here. The stop loss will be right here. All right. All right. So now let's go to, let's say, 15 minutes time frame. So we want to see if we can get a better view of the market from the 15 minutes time frame. All right, so we have another rejection. So after the breakout, we had a rejection. Okay, we had a rejection, and this looks as if the market broke out, made a retest, and now we should be expecting a sell. Guys, let's quickly enter this trade. USDCAD sell. USDCAD sell now. All right, so let's set a take profit and a stop loss for our trade. So this is my take profit, and then my stop loss would be here. So we have our entry, our we have our TP and stop loss. Okay, I think the stop loss should be here. Okay, I think where I had my stop loss earlier was too far. I'm just gonna edit this, guys. Let's use this stop loss. All right, so we have a new stop loss. This is the new stop loss. All right. So please edit your stop loss and enter the new one. Okay, so if you took the trade early, you should be seeing profit by now. The market is already going our way. Okay, so guys, please make sure to always check your trade, and once you're making good profit, make sure to close your positions. All right, it's very important. So yeah, let's quickly check our previous analysis to see if we have an entry. So we have analysis on, I think it was Euro JPY. Yes. Okay. So there's no entry yet. And then we also have an analysis on GBP USD. Okay. So there's no entry on both side or any side. Okay. All right. But for USD we are currently running a trade, and the trade is giving us profit. All right. And as I've said, please make sure to check your open position. Once you are seeing a good profit, make sure to close your position. It's very important. All right. Okay, guys. So that will be all for today. Join me again tomorrow, same time. Let's analyze the market together and look for possible entry opportunities. All right. So enjoy the rest of your day and bye for now.